As investors, we've got to be adaptable. As we age, we're probably going to adjust how we think about our allocation. Now, I'm actually turning 40 later this year, and that has got me thinking about how much risk I want to take in my investment portfolio. So here's how I'm thinking about investing as I enter my 40s. Before I get started, why should you listen to me? Well, I'm Tim from Tim Talks Money, and I worked in asset management and private wealth for over 15 years in both Hong Kong and Singapore. So if you want an unfiltered and no BS take on how to think about investing and sustainably growing your wealth, then do give me a follow here. Okay, so first off, I've never subscribed to the advice that you should have your age allocated to bonds. So say you're 35 years old and you should have 35% of your portfolio allocated to bonds. To me, that is just way too much allocated to fixed income at such a young age. Honestly, I'm 100% allocated to equities at this point in my life, and that's done through low-cost broad market ETFs, as well as selection of dividend stocks and growth stocks. But I do need exposure to defensive assets to actually give me a bit of ballast in case there's a market decline. So for me, the two big assets that I'm thinking about accumulating more of in my 40s are bonds and gold. So first off, bonds. How am I going to get my exposure to bonds in my 40s? I'm going to go with a low-cost broad market ETF. And the easiest way to do that is really to buy UCITS ETFs listed in London. The main one listed in London is the iShares Core Global Aggregate Bond UCITS ETF. And this is really a mix of investment grade corporate as well as global bonds across various maturities. However, I'm kind of worried about the indebted nature of Western governments around the world, as well as the exposure to longer dated debt. So I'm also considering something like the iShares Dollar Short Duration Corporate Bond UCITS ETF, which gives me exposure to investment grade corporates around the world. Okay, next up, gold. That's pretty easy. If I want Singapore dollar exposure to gold, I'm just going to buy the Spider Gold Shares Trust listed on the SGX with the ticker GSD. What if I want US dollar exposure to gold? Well, then I'm going to consider the iShares Physical Gold ETC. That's listed in London and is a UCITS ETF with a lower expense ratio than the Spider Gold Shares ETF. And that's traded in US dollars under the ticker IGLN. There you have it. That's why I'm thinking about investing into defensive assets like bonds and gold as I enter my 40s. I already have a small position in gold, but I want to move that allocation up. And I'm also thinking about starting to invest into bonds when I hit 40. For more insights on investing and wealth building, do give me a follow here or subscribe to my free weekly newsletter at timtalksmoney.com.